The conflict between Israel and Iran, reignited by a series of military attacks, is shaking the region and global markets, particularly the crypto market. In a context where volatility is often the key word, Bitcoin seems to be more sensitive than ever to geopolitical events, with a new drop of 4%, attracting the attention of investors worldwide. The new Israeli attacks on Lebanon and the Iranian response with more than 180 missiles did not leave the crypto market indifferent. After breaking the $62,000 mark, Bitcoin suffered a 4% drop on October 4, 2024, and fell to $60,282, before rebounding above this threshold to climb above $62,000 again on October 6. Indeed, these tensions could lead to an even more substantial decline, with forecasts indicating a possible plunge towards $55,000. Thus, the increased sensitivity of crypto to geopolitical events compared to traditional markets has manifested once again, while stock markets like the S&P 500 have only retreated by 1%. Despite this decline, the long-term outlook seems more promising for Bitcoin. The U.S. Federal Reserve, Fed, has hinted that interest rates will remain low in 2024, thus creating a favorable environment for risky assets like crypto. Therefore, accommodative monetary policies from the Fed and the People's Bank of China could well support Bitcoin until 2025, as these two economic powers continue to stimulate global liquidity. Moreover, the $6 billion expected in repayments to FTX customers should also contribute to an improvement in market liquidity. This potential capital injection could offer a respite to Bitcoin and other crypto, as investors might choose to reinvest these funds into these assets. When combined with the historical impact of U.S. presidential elections, often followed by a rise in Bitcoin prices, the prospects for the flagship crypto remain optimistic. Before going further, do subscribe my channel and turn on notification to have this type of videos.
This bull market was quite noisy, and the moving average tracks right through it, but there's months way above this moving average and months way below. And the same is true, for example, for 2019 and 2020. And we talked about this period before at the moving average sheet. And we see it's very noisy there. We had this pre-halving pump too early, then a correction, and then, of course, COVID as a kind of, black swan, which really put a dent even in the moving average. But the moving average kept rising, and then here in the bull market, it's all on track again. And actually you see the same thing right now. Back then, it felt like front-running in 2019, front-running the halving. There was all talk about the halving and stock to flow, of course, which was published here. So there was talk about front-running. We have that same talk about front-running right now. With the ETFs, where retail had the opportunity to front-run Wall Street for the first time. So we had this too early, before the halving pump, and then, of course, there was this dump after the halving because of government selling, Mt. Gox selling. But all in all, moving average was pretty stable and rising. So, in my opinion, the flat bull market that we see in the price can be just optics. A rising trend disguised by noise and mixed signal. Because if this were a gradual growth from all the way from 15 to the current 63,000 Bitcoin price, then the RSI would be not this noisy. And we would be not that confused about this sideways Bitcoin price.
Currently, Bitcoin is moving within a large descending broadening wedge pattern, often signaling bearish momentum. However, recent oversold signals suggest a potential short-term shift. According to analyst Josh of Crypto World, larger volatility, potentially impacting support or resistance levels, may occur as the new trading week begins. Here's a breakdown of his latest analysis. Over the weekend, Bitcoin's price may stay relatively stable with minor bullish relief. If Bitcoin does see an upswing, liquidity zones around $62,700, $63,400, and $64,200 could serve as potential resistance areas. However, a drop could see Bitcoin test the liquidity near the $60,000 mark, a scenario more likely to play out during the week when trading volume rises.
It has this 8-month flat period here. Note, by the way, that the color is different in the moving average chart. It's months until the next halving, not the phase we're in, not the bull bear market. It's just a timer. And the halving is at month 0. So when blue switches to red. So this is a halving in 2016. This is one in 2020. And this is the latest in 2024. And well, as we can see, there was a flat period in 2015 as well. Quite long, more than half a year. I think it's also 8 months here. But that was a bear market, of course, at around 250K. More comparable, I think, is this flat period here in 2019, 2020. That's around 10,000, little under $10,000. And also a period with a halving in there. So that's very comparable, I think, to where we are right now, because we back then we also had this pre-halving too early pump, and then COVID that really spoiled the party. But that was basically a 1-month event in the end, because the money printer went on, the QE was started, and then that was the trigger for the entire bull market. Of course, Michael Saylor started buying Bitcoin here, and later Elon Musk went positive on Bitcoin. But that was sort of the trigger, and it's a bit of the same period, same pre-halving pump situation above the moving average. So this black line, of course, is the moving average, and we use it to smooth out the noise. So right now it's 40K, and Bitcoin for the entire 8 months flat period is above that 200-week moving average. Same here in 2019, 2020. So yeah, moving average is increasing.
What are your thoughts about Bitcoin? Share your thoughts in comment section. I hope you like it. If you like it, do subscribe my channel and turn on notification.